The model that we've used to have success with Mount Marion, for example, albeit a different mineral and a different stage, it's identical with the other projects. We identify something, we jump on it early before it's deemed sexy, spend a bit of our own money, build up the value, attract partners. So in a different market, some people may say, oh, that's too conservative. In a bad market, some people love that. Either way, that is the model that we use, and it's a bit different.
Hello and welcome to Crux Investor. We're here today with Jeremy McManus. He is the General Manager of Neometals. Jeremy, how are you?
I'm good, thank you, Matt.
Ever here for the one-to-one?
I am, yep. Had some other business in Germany and just arrived.
That's right. So what were you doing in Germany?
So Neometals, part of our business relates to lithium-ion battery recycling. So there was an event there that we spoke at and got a bit of a sense of what all the other players are doing and what industry's looking for.
Oh, let's come back to that in a minute. So kick off with a 1-minute summary of the business for people new to this story, and then we'll kind of come back to certainly that topic and a few more.
So Neometals is an Australian listed company. It's essentially a project development business. So it's not a mining company per se. Our focus, it's diversified asset based, but the focus has a central thread to it, which really is around minerals and materials. And I say materials because we're value adding and downstream targeting, specifically to do with electric vehicles and the energy storage thematic, if you like. So that ties it all together on a range of different commodities and what have you. But there's 3 core projects that we're really focused on. Okay,
so we'll get into those. You made your money in mining, but you're not a miner now, so you made a lot of money in mining. Do you want to give us a quick highlight of?
Not a miner per se. We have upstream mineral projects that, hopefully, touch wood, will become mining projects for sure. But yeah, where the money came from, the balance sheet that we have is, the last quarter it was about 107 million Australian dollars.
Useful.
Yep. And that came from, we originally had the Mount Marion lithium mine. We developed it. We brought in a couple of billion-dollar partners. They earned their equity. One of them bought the equity, the other one built the project and operated it for us. And we sold down our position over time. We started accruing a cash balance. We returned money to shareholders along the journey. And then in February, we sold the last circa 14%.
Right. Okay.
So as a result, we've managed to pay some dividends over a period, which makes us a little bit different from some of our peer group.
It does. Very popular, I'm sure, with your shareholders. So let's talk about those 3 projects. If you can just sort of highlight those, and then we'll, I guess, come back to your primary focus, which is the battery recycling.
Yep. Okay. Well, I'll touch on the recycling insofar as to say it's a technology that we own. We developed it. The idea is that we can recover critical metals, valuable metals from those batteries, and sell them as chemical products back into the battery chain.
Right.
So that's happening, and that's at pilot stage. We have a partner. The other one, and that's probably the core focus.
We'll spend some time in a minute on that.
Then the other 2, we have the Barrambie vanadium and titanium project in WA. It's a really big project. We own it 100%. We've spent some 30 million Australian dollars on it over a long period of time. And it's probably the world's second highest titanium grade resource.
Right.
So we see that as strategically really interesting, and the devil in the detail is probably you have the benefit of having vanadium and titanium co-joined, if you like, and we've just been working hard to figure out the best way to extract both in a flow sheet, and we're working on that now.
Okay, third project?
Third project is a lithium hydroxide project. From the sale of Mount Marion earlier this year, we got a bunch of cash, $104 million, but we also got an offtake option, an annual option for roughly 60,000 tonnes of spodumene concentrate.
Right.
So that's valuable because, what do you do with that? It comes from Australia for one, so it's a tier 1 jurisdiction. At the moment, there's too much supply. In the future, we believe just having access to the raw material is valuable. For now, not so much. But really, the benefit of having that is that the material's been qualified. So if you've got an iPhone, it has a little piece of Mount Marion in it, guaranteed, because we know that that's where the material ended up in the supply chain with Foxconn. And as a result, we know we can turn it into chemicals.
Right, okay. So you you're developing the vanadium titanium and the spodumene project, but they're not core focus. They will be monetized at some point. Your core focus, which I do want to spend a bit of time on today, is the battery recycling. Clearly, very topical, thematic. Everyone's trying to link whatever they do to the EV revolution. You're coming at it. Why I'm interested is because it's kind of sort of almost at the back end, isn't it? It's people like talking about what's going into batteries. You're talking about getting stuff out of batteries, right? So what is this proprietary IP that you have, and where are you with it?
Sure. Yeah, no, so that's exactly right. And I've got a diagram that I'm talking to in the presentation at this conference that shows there's a loop and it comes back at the end. So essentially what we have is a flow sheet which we designed to extract cathode and electrode minerals and turn them into chemicals. So we're going an extra step in refining the material so we can sell it straight back into the battery supply chain. It's patent pending. It's novel, and that's great, but I think half of the opportunity here is in the business model. So the technology is one thing, but without the business model, you would struggle. So your stage of development is being piloted in Canada. Everything's going great guns. You pull the metals out sequentially in a leaching process. So we've pulled out copper, cobalt, manganese. We've had great results so far, and what remains is the nickel and the lithium to finish the pilot study. But that will essentially be a trigger for us with our partnership with the SMS group to continue to the next stage.
Okay, so let me understand this. So you've got a process, which, as you say, that's just admin in a way, without the business model. Can you explain the business model a bit further? You've got a pilot plant or pilot project on at the moment to work out if you're extracting it efficiently. Where do you get the supply from? If this thing works, who are you partnering with? How do you finance it? How do you feed these batteries into your system?
So I might even take one step further back from that. The way this actually works is it's a two-stage process. So the first stage, assuming that you have the feed, you can put in a range of different chemistries in different formats. So consumer electronics, think phone batteries, laptops, etc., and that's high in cobalt, or vehicle batteries, nickel, metal, cobalt, NCA. So we've designed it broad. It's taken a while, but we've done it properly. Once you shred the batteries, we've developed that process. It's probably not patentable, but there's know-how and it's taken us a long time. That's the first step. You recover the metals, the casing, the plastic, the foils in the batteries, and that goes to a home, a recycling home. Then you have a black mass which you can travel with if you choose. So this is where the business model comes in. Because the batteries are a storage fire risk and a transport fire risk, if you can neutralise them, if you like, in one location, then you've got the luxury of moving them anywhere you like. And our intention then, in a hub and spoke approach, is to send them to a central hub. And that's the second stage of the process where that black mass goes in. It's a hydromet leaching process, and you have a pregnant liquor that you just extract the metals one by one in stages. And you refine them so you can sell them back to the supply chain. Okay,
so I get that. You've explained the process there. What I'm interested in is the business. How do you commercialize it? So are you going to pay for the development of this? Are you partnering with people? How does it get into that ecosystem, as it were, where you're monetizing your technology?
So the trick with all of this, with the upstream minerals projects, is you have resources, you own them, they're there in the ground. With this, the resource are spent batteries at end of life, or their production scrap. So that's the target.
So where do they come from?
They come from cell manufacturers, so scrap from cell manufacturers. Anyone who's deemed a producer in the EU and Europe has a responsibility that they can't shirk. They must recycle the batteries. So the feed material comes from cell manufacturers, from the guys that pack those cells that have waste material, then from the auto manufacturers, whether it be warranty or maybe 8 years down the track at end of life. And they will either be dealt with by the auto manufacturer themselves, or they'll essentially go to a scrapyard, an aggregator, and there's another feed source.
So what do you do? Are you getting contracts with all the auto manufacturers or the, with this aggregator,
Yep.
have you got to sign a whole bunch of contracts here? Is that the process, or do you have a sort of simpler
we want to make
way
it,
of getting?
Yeah, we want to make
the
it
feed?
simpler than that. So
Right.
what we've done is we've been talking for a long time with a big German group, a metallurgical plant company called SMS,
Right.
privately owned company.
You've got an MOU with them at the
Got an
moment.
MOU.
Right, okay.
So
How do you move it from an MOU to where you want to be next?
right, and that will be a joint venture with them,
Right.
where they're committing hurt money, if you like, in the eyes of investors. So we have an MOU now where they complete their due diligence. They have an exclusive period, a short one at that, to complete the diligence, and they've been doing a lot already. And that'll be based on the pilot results. So we're piloting in Lakefield, Canada.
Yeah.
It's almost complete. Come December, we write a report,
Oh,
we send it to the Germans, and touchwood, we enter a JV. What happens then is we share the costs on a demonstration plant,
Equitable?
sharing the costs
Okay.
completely. They
Okay.
SMS have permitted sites available, and that's important, and they have boots on the ground, which again, for a West Australian company, that helps. With a view to then sharing the costs on a feasibility study using the data from our pilot. And then we come away with a view to making an investment decision at the end of the year. But in parallel, you're figuring out exactly where the feed material's coming from together.
Okay.
Offtakes, arrangements, partnerships, because it might be that you buy feed from someone, it might be that you provide a service, and there's no cost for acquiring those cells, and you might share the economics.
Right.
But ultimately, we make money by providing a recycling service, either by ourselves or in partnership. And at the back end, we sell the chemical products to the value chain. And that could be to a chemical company or straight back
Yeah.
to the guy that gave us the cells, because he needs to close the loop on what he's doing.
That's interesting. That's interesting. So you mentioned a phrase earlier, spoken hub.
Yep.
Right. So that says to me that you've got to watch the cost there, right? So you can't, these satellites can't be expensive to set up in their own right. So it suggests that it's quite a sort of cheap and quick and easy thing to do. So how do you work out where to locate these satellites?
In terms of the cost,
Yeah.
roughly, if you said to yourself, it's 5% of the total capital cost to do a shredding facility.
Right.
So it's much smaller money. So and it can be containerized, and you can locate that in multiple locations to feed a central hub. So where would you do it? Ideally, you do it right next door to the guy with the problem, and he has the feed supply, he has a regulatory commitment, or he has a fire risk, or whatever the circumstance may be. But ideally, you would be getting your cells initially from a cell manufacturer who has an awful lot of scrap right now. You don't have to wait 8 years for the feed supply, because there's a lot of conjecture about there won't be a market for this yet, surely, because we're not driving the vehicles. And the answer is it exists, because they're making the cells.
Yeah.
And
what are they doing with them now? Do they recycle? Is there a recycling business today? Does that exist?
Yeah, there is. Yep.
So what are you doing that's so different?
What we're doing that's different. So what happens today is you've got a couple of companies that use a pyrometallurgical tech. They throw cells into a kiln, they contain the explosions, and what you get is a mixed metal button, if you like.
Okay.
It's base metal recovery, and a lot of the other material gets wasted. It's not truly recovered. You lose the lithium, etc.
Okay.
So what we're doing is a hydrometallurgical route, where you look to get more than 90% of those ingredients back. So it's greener, it's sustainable for one, but it allows you to actually target all the materials, and that's valuable to the guy with the feed, because he needs to be seen to be closing the loop on his supply chain. And some of those minerals that go up the stack are valuable.
Interesting. So it's a greener solution, which again has got to be a good thing for automotives looking for angles in terms of recycling. I'm really fascinated by the business model, because you guys have kind of created a little ecosystem of some quite smart people who solve complex problems. That's the way I read it. Okay, so with I want to talk about the satellite thing. So, are you licensing out your IP for other people to operate, or do you want to own and operate these on behalf of other people? White label it, as it were. How are you thinking?
Look, we're very flexible in terms of, because I don't think you can be too set in your ways to get a foothold in this sector.
Right.
So absolutely, we're open to the concept of licensing, but in an ideal world with a big partner like SMS, you now have the wherewithal to go to a cell maker or a vehicle manufacturer who might have otherwise said, look, how are you going to build it? Who's going to operate it? Who's going to maintain it? So we have an answer for that now. Ideally, you could target a very big cell manufacturer or car company and just target that initially and show the market that you know what you're doing, you do a good job. So we would ideally have those satellites ourselves, but it's not to say that that model could change in a number of different ways.
Because obviously you want to capture as much of the value as possible, and your shareholders want to hear that, but at the same time you don't necessarily want to be an operator, don't necessarily want to be an operator, because you want to move on to the next project.
Well, there's a lot of smart people that can operate kit like this. SMS can do it. You know, there's companies all around the globe. You think about people like Veolia and others. This is what they do. It's their bread and butter. So no, we don't have the bandwidth to be operating plants ourselves with a 30-strong team in West Perth.
That's what I mean. It's a very different company, right?
No, but this is the concept. It's quite literally, it's a project development business where, you know, we bring these different parties together, and in essence, that's kind of the strength.
No, I get that. I mean, I always sort of jokingly say to some CEOs, you know, if it wasn't for people, business would be easy.
Yeah.
So, you know, building up thousands of people, employing thousands of people, it has its challenges.
It does.
Has its challenges. Okay, so if we can sort of talk about some of the numbers, you've got a bunch of cash. You're over 100 million Aussie. That gives you options, right? But people want to know that you're not burning your way through this. Can you give us a sort of sense of some of the numbers? You know, to develop the pilot and so forth, you're, I assume, not burning a lot of money because you're going to be doing a joint venture. You've said to me.
Yep.
Your burn rate, you've told me previously, is reasonably low. You've got 30 people.
Yep.
How do you assure people that you're kind of not going to waste this $100 million and fritter it away?
Yep, absolutely. So that is important, and a lot of the projects are in the midst of these feasibility and engineering studies. So to talk specifically about the numbers, obviously prefer to wait till the reports come out.
Sure.
But yeah, there's definitely a rigour in what we do in terms of being careful with the cash. So there's a balance between you must spend a certain amount of money because you've got real projects. It costs money to make money, but we want to get them to a point where, you know, ultimately you can hand over or work with a partner and they start writing half the checks. And for us, with 3 development projects, one that sticks its head further above the parapet than the rest, that's the point. When you get to the joint venture point, I think that tells the market there's a piece of validation that these companies have verified what Neometals is doing, and they're going to start contributing to the costs.
And these are big companies with big balance sheets, so it says a lot. They don't take decisions lightly.
But I think there's a track record, a building track record there of actually having execution success on projects. The model that we've used to have success with Mount Marion, for example, albeit a different mineral and a different stage, it's identical with the other projects in terms of, you know, we identify something, we jump on it early before it's deemed sexy, spend a bit of our own money, build up the value, attract partners, which we've done with these other 3 projects as well. And we do that because the company's actually really quite risk averse. We want to get the scale right. We want to get the speed to market right, which is very important with the recycling. You know, and it validates what you're doing to the market. But it's sort of the central tenet to what we do, and the board very much is driven by that. So in a different market, some people may say, oh, you know, that's too conservative. In a bad market, some people love that. Either way, that is the model that we use, and it's a bit different.
It's very different. I mean, you're over here. You've been in Germany. You do the rounds, you know, at the various shows and so forth. Do people understand the story? It is different.
Yeah.
Is that a good thing as far as the market's concerned?
It's a good thing. It's a hard thing to communicate because, you know, you're a certain market cap company, but you're diversified. So that's a mouthful in terms of the quantum of information you have to translate. But I think if you can distill it, which we're getting much better at doing, and I think spending more time in Europe means that the European market gets a better sense of what it is exactly that business does. So that's why I was here in part,
Yeah.
as well as speaking to end users and attending a recycling event.
Actually, tell me about. I did say I'd ask.
Yeah.
So you're at this event. What's the mood? What's the chatter about at this conference that you're at in Germany?
So it was a waste conference, if you
Yeah.
like, that had 3 different streams, and
Okay.
there was a specific battery recycling stream,
Mm-hmm.
and it was focused on lithium-ion batteries as well. So it was a smallish crowd
Right.
with some very big companies there.
Yeah.
I think the mood was very strong. I think no one argues with the fact that cell production and gigawatt hours, there's a trend that's not going to change. There's too many big companies making big commitments that can't be reversed, even if you and I don't drive one. I don't know if you do, but I don't. So the timeline may change a little bit, but the trend will remain. I think I took that away. And I also took away that when cells are spent, you've got 2 options with them. And a lot of people are looking at, well, can I repurpose them and use it in a second life? Could I use it in home storage, for example, to support my roof solar?
Yeah.
And that's absolutely a thing that is happening, and it's viable. But I took away from that event to say there'll never be 100% of those cells used for that purpose. There's too many challenges. Least, but not only being that, if you were designing a cell for home storage, you'd actually use a different chemistry other than vehicle chemistry. So it's making something of nothing. It's great. For us, we're agnostic because at the end of the day, that cell too will die.
Yeah.
So.
And you get to recover it.
Yeah.
Fantastic. Well, Jeremy, thanks very much for your time. It's good to see you over here in London.
Thank you.
I think it's one of the more interesting companies that we're following at the moment. You say it's slightly different, and yeah, I think it is a good thing.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.